Good morning, traders. Welcome back to OVLYR Live. On today's live stream today, we're going to be talking about our top three stories of the day. Tesla is attempting to stoke demand with 84-month car loans. Next, AMC's CEO, Aron, has just posted a new letter, and AMC's getting short squeezed. We're going to be talking about that. Lastly, Meta has decided it no longer cares about the news, it cares about the influencers. And if you care about all this, get ready to rock and roll. Let's do it. All right, our first story of the day, Tesla attempts to stoke demand with 84-month loans amid affordability crisis. Well, where is this affordability crisis coming from? Has a lot to do with interest rates going up right now. And let me tell you real quick, if you're just joining in, my name is Christopher Yule, and I love talking about stocks and finding those outlier trades with outsized returns. And if you're interested in that, be sure to hit the subscribe button so you never miss one of our OVLYR live episodes. So let's get right into it. Oh, but before I forget, today's episode is sponsored by OVLYR.com. Go to OVTLYR.com to find out why outliers win. Now, Tesla is attempting to stoke demand with 84-month loans amid affordability crisis. Listen, just a couple years ago, these loans were in the 2, 3, 4% range. I actually just picked up a Tesla a few months ago, and it was in the 5% range. Now we're looking at loans in the 7, 8, even 9% range. I saw something somewhere that said, here we go, 84 months, this estimated APR is 6.39%, but auto loan rates are hitting the highest level they've hit since, when was this, 2001? We have not had levels this high since 2001. Now, keep in mind, I don't have the data on how much the cars cost between 2001 and now, but I can guarantee you that it's a hell of a lot more now than it was back 10 years ago. So while this does present a crisis opportunity, is this an opportunity for Tesla, right? We're talking about the crisis to making these more affordable, not just these cars, but everything in general, right? I mean, we're talking about mortgages. The average mortgage payment has more than tripled, I believe it is. And now we're looking at the fact that everything you want to buy costs more. And a lot of that has to do with the rising interest rates, which is what the Fed overall wanted. Because if rates go up, and Tesla is a perfect example of what they're trying to do. If rates go up, it makes things less affordable. And if things are less affordable, that causes companies to have to lower their prices, which we've already seen earlier this year from Tesla. And if they lower prices, then that's going to help offset inflation and potentially, if things go sideways, even cause deflation. Now, deflation sounds great since we've been living in an inflationary environment for so long, but if we do go to a deflationary environment, what does that mean? It means that really nobody's going to be buying anything, because why would they? If they can wait a couple months and they can save a few $1,000s in the process, I know I want to be waiting a couple months. So let me know in the comments down below. Do you like what Tesla is doing right now? Hit that like button. And if you're interested in getting one of these 84-month loans, tell us why. What interests you in this? What is that? 7-year loan, right? A 7-year loan definitely makes things a lot more affordable, but at the same time, you're going to be a lot more upside down on that car, meaning you're going to owe more than the car is worth. So who knows at this point? Let me know in the comments down below, and be sure to hit subscribe. And let's move into our next story. All right, our next story of the day is AMC. AMC is getting short squeezed right now, and I gotta tell you, if you are an AMC ape, if you've had those diamond hands, you're probably very, very happy this morning. And if you're just joining in, my name is Christopher Yule. I love talking about stocks and finding those outlier trades with outsized returns. And if you're interested in that too, be sure to definitely hit the subscribe button down below. And today's episode is sponsored by OVLYR.com. Go to OVTLYR.com to learn why outliers win. Now, taking a look at the outlier data in AMC, nothing's really been happening over the last several months, right? We've been moving a couple dollars here and there. I mean, it does show a 224% signal return, but nothing's really been happening. In fact, recently in April, it had a sell and take your profits sort of signal. But right now, we're looking at a huge run in AMC. At one point, when the market, let's see, it's actually come down quite a lot. At one point, when the market closed on Friday, we got some news, and that AMC price had more than doubled. It was up over 100%. You can see that spike right there after hours. Boom. up over 100% on some news. Now, what is that news? That news is a bit confusing, so hang on tight, right? I actually had to research this to make sure I got it all correct. So AMC earlier this year had issued APE shares. These were preferred stock for AMC with the intention of eventually converting those into AMC common stock. Well, a judge last week on Friday ruled that they will not be able to convert those into common stock. And when they don't convert those into common stock, then the company can't raise additional funds. That was the only reason they even issued the APE stock to begin with, was to raise funds. But now a judge has said, you can't raise funds, you can't convert these into additional stock, and short sellers are very upset about this because by issuing this additional stock, it would have brought the price down. It would have caused dilution of the shares, right? And that's why the price spiked so much, is because they're like, wait a minute, if they can't get out, or if they're not going to be able to issue additional shares, then that means the shares that we have on right now are going to go up. And if our shares go up, that's not going to be good for us short sellers. Now, let's jump into the letter real quick and read a little bit. Adam was writing and saying that the uncertainty caused by the writers and actor strikes could delay movie releases scheduled for 2024 and 2025. And of course, their industry, I mean, it really needs and revolves around those movie releases. If they're unable to raise equity capital, the risk materially increases of AMC to conceivably run out of cash in 2024 or 2025. Now, of course, if you are an AMC stockholder, you don't want to see that happen, right? Because that's a longer term play where AMC goes to zero. But in the short term, we're seeing a shorter term play where AMC has doubled, and at least after the open right now, AMC is up over 20%. And you know what, these meme stocks, they can run like nobody's business. So if you like AMC, hit the like button down below, and let me know in the comments: are you buying AMC? When you got this news, when you heard this, were you like, oh, I think I need to buy a little bit of AMC to get ready for this move? Or were you one of those people who decided, you know what, AMC is crazy, these runs are crazy, and I'm going to sit on the sidelines and let everybody else figure out what's going on, because that's kind of what I did. So let me know in the comments down below, and let's go to our final story of the day. Okay, so Meta has decided to push influencers over news, right? They're saying that their priorities have shifted. So before we jump into that real quick, my name is Christopher Yule, and if you're just joining us, I love talking about stocks and finding those outsized trades with outlier returns. And if you're interested in that too, be sure to definitely hit the subscribe button down below. And today's episode is sponsored by OVLYR.com. Go to OVTLYR.com to find out why outliers win. Now, what is this really saying? I think this headline's a bit sensational. So Canada is having a law that is going to require Facebook to pay, I believe, if I read this correctly, where is it at? Facebook is going to have to pay broadcasters for their news. And so Meta decided, you know what? We're not going to pay anybody for their news. We're just going to remove the news. Listen, I don't know about you, but a lot of the news these days has been a lot of fake news, a lot of malinformation, misinformation, whatever kind of information you want. And so I personally, I'm hitting the like button on that one, because everything right now is just about generating clicks. And rather than generating these headline clicks, especially coming into elections in the next 18 months or so, I don't blame them. This is in Canada, but this could be pushed out wider. I don't really blame Meta for deciding to remove the news off their sites and push more influencers. Now, what you're going to see happen in that case is the influencers are going to decide or the influencers will have a stronger opinion, because they're going to be paid by these political activists who are going to be pushing their agendas one way or another. And so instead of removing the news, we're going to be getting influencers telling us who to vote for, which isn't really anything new, but it's just the reality here. Now, Meta stock had a sell signal back on July 5th inside of OVLYR, and maybe this is just the beginning of where this is going to go. Now, I saw some Twitter comments, which I thought was pretty funny. Let's see here. So everybody is basically saying, you know what? we're done with Meta. Nobody really cares about Meta anymore. And the fact that Zuckerberg has basically said all of your data belongs to us. We don't care about you. We don't care about the news. We care about pushing these influencers, and we care about making as much profit as possible. I think is kind of driving people away from Meta. And, that may be one of the reasons why we're seeing this sell signal generated in OVLYR. But Meta stock is on the day, it's up a smidge, up 67 basis points. So where are we going to go from here with Meta? Well, I can tell you the longer term trend has definitely been up, but boy, has it hit a wall. Has it hit a wall like nobody's business right now. Down below its 20 period EMA there. We've got a sell signal in OVLYR. And for me personally, I don't know. I'm not buying any Meta stock, and I don't know about you, but hit the like button down below. If you like Meta, go ahead and hit the like button. If you don't like Meta, hit the like button as well. It helps out just for fun. So that will cover all of our stories today. We talked about Tesla, who's trying with 84-month auto loans to recapture some of the potential lost market. They've already lowered prices. Now they're extending loans to try and increase that demand, give them more opportunity for people to afford the monthly payment. We talked about AMC. They can't dilute their shares anymore, and they're getting short squeezed. And I don't know about you, but I'm going to watch, and I'm not going to get any of my money at risk there. And then we finally covered Meta stock, who's decided, you know what, we don't need the news in Canada, we just need our influencers. So we'll see where that goes. Thank you all so much for tuning in today to today's OVLYR Live. Be sure to hit the subscribe button and the like button, and I will see you right back here actually tomorrow. Talk soon.